What's going on YouTube and cryptocurrency family? My name is Harry. I'm the CryptoVet. Thank you for tuning back in. Super exciting things going on right now. We have Crypto Answered with Kellam and a bunch of special guests. So we're going to be tuning into that here soon. So that just finished up. I'm going to go ahead and wrap this up so I can get everything edited. But thank you guys so much. If you guys like these videos, we can try to pump out more of these. And of course, I'm still trying to get more TA videos out, but you guys know my schedule is absolutely packed, but I'm still here for you guys. So hop in the Discord, hop on Twitter, tell me your questions, and you guys know I'll get back to you at some point. But otherwise, I'll be back on HEB and a couple of other shows here in the future. Lots of big things. Talk to you guys soon.
Up and coming, getting a really dynamic discussion about everything from Bitcoin to yield farming to NFTs to hodling versus trading versus, because everybody's got their own strategy. Some people argue hodling's the only way. Other people say swing trading. But all right, looks like people are rolling in here. So we'll just go ahead and get started. Not everybody needs to hear the intro, so we'll just get it going. What's up, everybody? My name's Kellam, and you are here on Crypto Answered. I got my co-host, my brother, my compatriot here, Mr. CryptoVet. How you doing, good sir?
Man, I am doing wonderful. So happy to be here. We're getting all this stuff set up. My wife actually just gave me a haircut, so I'm happy. How's everybody else doing?
Oh man, yeah. And just so everybody, if this is new to anybody, on the bottom, there's a little heart emoji with the plus. You can do small little just emoji waves and stuff to interact, if you will, with whatever's going on. So those are always pretty helpful. But yeah, I'm glad you got a haircut. I need to get a haircut, Mr. Vet. My wife is coming back tomorrow. She's been off traveling the world doing music and visiting family, and I wasn't able to go with her because I was doing my business thing with Crypto Jeb down in Florida. But she's been away for a month, so I should probably go get my haircut tomorrow morning because I'm looking pretty pandemic-y right now. Alrighty. Looks like we're getting... All right, I thought I was having some issues there. All right, so Mr. Vet, I'm going to let you lead the charge on this one. Last week, I gave the quick rundown at the beginning where we were at in the market, just kind of general rundown of what we're seeing, and then we'll do pretty open format today with we'll talk about what's going on with the market. Is this a reversal? Have we found a bottom? Have we not? What's the interaction between Bitcoin and Ethereum versus Bitcoin and the other alts? If we have any other tokens and projects that are kind of piquing our interest, and we'll just open it up for a bigger part of this discussion, hopefully, than we did last time. I don't think we're not going to have as many guests this time as we did last time, but to kick it off, again, thank you everybody for coming. This is Crypto Answered. I'm Kellam, and we got CryptoVet here, and I'm going to let CryptoVet take this one away. So why don't you start it off? You had a great Wyckoff thing on your Twitter as well. But yeah, go ahead and kick it off. What are you saying, my brother?
Sweet. Yeah, thanks everybody. Yeah, my name is Harry Malinsky. Most people know me by CryptoVet or Doc. Super glad to be here, and we're going to try to add a little bit more structure to our Crypto Answered. So, for now, I can do a little quick segment on TA since that was a high requested thing from some people. So I'm also recording this at the same time, so I will have video to correspond that will also go over charts and things like that. The first thing, notice if we just kind of head to like the Bitcoin dominance overall, we've been hovering around the 40 on Bitcoin dominance, and the question is Bitcoin going to shoot up, reclaim some of that dominance, or is Ethereum and some of the other alts actually going to bring the dominance back their way? We're going to have a little bit of a little alt season, and maybe that will carry Bitcoin up to new highs. We don't really know right now, but we do know that crypto market cap right now, we've reclaimed the 2 trillion. We're on our way up. Gas fees are through the roof for Ethereum, so that means people are actually trading. There's congestion on the networks. So all of these are kind of pretty bullish things in my mind that we are going to have some sort of turnaround. If we look at Bitcoin right now, we have been in a downtrend since our high on November 9th of 2021. We've been on a downtrend until a couple days ago. This is about 63 days of downtrend. So looking back at what happened in May, where we had a continuation pattern, our little top We then consolidated. We had another little continuation pattern, consolidated, and then we're now sitting at the $40,000 level. Well, back when we were at 30, a lot of people called me stupid for saying that this would be a bottom and we may go to the upside. I also showed the likelihood that we could potentially go to the downside, and that 30K is just a very key level. Well, we're at the exact same spot we were a couple months ago, 6 months ago. And 6 months ago, we had one sign. Most people missed it. And then we had two signs for the next pump up. Well, in my opinion, this is our first sign before we'll have a continuation pattern, and most likely a probably 78 to 80% move to like 60 or 70K for Bitcoin is honestly what I'm seeing as a more likely scenario, especially with some bullish divergence forming over the past month, similar to what we saw back in June, July. So, I mean, overall, I'm pretty bullish on the market, and it's funny how sentiment changes from one to the other. And, for the next week or so, we'll probably have some bullishness and then go back to bearish. But that's kind of what I'm seeing right now. What about you, Kelly?
I mean, I think you nailed it straight away. I did a post on my Twitter a couple of days ago with basically seeing a sort of pseudo triple bottom forming on the dominance. But one of the things I'm looking at is also in correlation with not only the dominance, finding that resistance or support there at the 40 level, but then also, I mean, if you look at not that it's always directly correlated, but it's pretty, they reference each other pretty inversely. The Dixie, the dollar index, and the Bitcoin price. And interestingly, and almost I would say more consistently today, right when the CPI numbers came out, the dollar fell the same second the Bitcoin shot through the roof. So just looking at the grander TA patterns on the dollar index and what sort of price action or index action that the value of the dollar can face, I think will have a huge effect on what's going to, how the Bitcoin price is going to play out in the next few months. But before I continue, I do want to introduce here, we got another fellow technical analyst that I've been following for a while here on Twitter, and he's been making waves. It's always such good content and so much to add to the space. I've invited him to speak. I'm not sure if he's seen it, but when he hops up here, he'll speak in a little bit. His name's Jesse Olson, but he'll hop in when he's good and ready. And I got a couple other analysts that'll be hopping in later. But in addition to that, what I'm also seeing with Bitcoin is, and you kind of painted it fairly clearly on your Twitter, that which is the Wyckoff accumulation. But the only problem I have with the Wyckoff accumulation, it's not actually that I think it is or isn't. It's that I think that a lot of us can gain a lot of hopium when we see a pattern structure for like a distribution or accumulation, especially right now when we have a big dip that feels like it's taking forever. For one, nothing in Bitcoin has taken forever, because we've gotten from basically $0 to upwards, upper almost $70,000, and we're still in the 40s. So in under 13 years. So nothing's taken forever. So when we have to wait a week or 2 weeks or even 6 months sometimes with sideways action, we need to be a little more patient. And the reason I bring that up is because when we see reaccumulation sort of zones or Wyckoff accumulations, we have a very natural tendency, at least I do, to I can find a way to map that reaccumulation 6 different ways, where I find a spring 6 different times and it doesn't play out, and it goes further and it goes further. So my whole point with that is, it's very, very important to be hyper vigilant and hyper open-minded, and in the sense that you need to always play your trades both ways. As sure as you are something's a spring, you've got to still plan for it not playing out, or if it's still if the market makers are still trying to flush people out of their trades, or if they're leverage hunting or any of those sorts of things, you've got to make sure that unless you're a very seasoned trader, or you've just got endless money to trade with, which I don't think any of us do, you've got to make sure that you're entering your trades with conscious thought of what the opposite direction it could go from your trade is, and place your stop losses accordingly. Otherwise, you're going to find yourself eating into big chunks of your portfolio rather quickly, because you're betting it all on that big trade you're going to get, and it seems to always go the other way. Well, when you actually take a breath and you plan your trades a little more conservatively, in the sense of like making sure you have your stop losses, you're not betting your whole portfolio, and you know what direction it could go in either direction, then you'll do yourself a huge favor there, and not trading out of your portfolio versus trading into it. And, Warren Buffett says, the stock market is just a tool for transferring money from the impatient to the patient. So you don't need to win 35% or 100% in every trade. Get those little 2%, 7%, 8% scalps here and there, and you'll do yourself a lot more of a favor in that regard. But man, I need to go back to the gym. I just walked up my stairs and I feel like I ran a marathon.
Get you back in the weight room.
Yeah.
I think we have Jesse up here as speaker, so I'll let you go ahead and introduce him, Kelly. And
Yeah. I actually just introduced him right before I spoke. He's an incredible on-chain or a technical analyst. I've been following for a while. He's making waves throughout the Twitter personality crypto community. But yeah, what are you seeing? What are you feeling? How are you feeling about what's going on, Mr. Jesse?
What's going on, everybody? This is first time speaking on Twitter Spaces. Just got back from the gym myself. So I said if I got back in time, I'd definitely jump on with you guys. So not sure what you guys really want to know. Usually on Twitter, I'm updating nonstop all my charts, but kind of what CryptoVet was saying too is, since the top of November, I'm seeing a downtrend, but things that I've spotted before that was bearish divergence. And if you look at the weekly and monthly RSI, you'll see that we've had long-term bearish divergence dating back till February 2021. So you can, when I've been comparing lately other coins or other crypto assets, for example, Litecoin, it's been in a bear market since May, right? So the RSI, I just did a recent comparison, a weekly RSI comparison of Litecoin and Ethereum, and I didn't label the assets. One person guessed it correctly because he's been following my work for a while, but Ethereum looks exactly the same as where Litecoin was, but of course Litecoin is 5 to 7 months ahead of time, right? Or 7 months ahead of time. So Litecoin's been in a bear market since May. It's just further confirmation that Ethereum also looks like it's in a bear market, which also means other assets have come into a bear market. So everybody hoped for a blow off top. I hope for a blow off top because I'd make more money, but you got to trade what the market gives you and take profits when you can, whether that you're trading a short, like I recently took a Ethereum short at 4,386, and I had a preset closeout at 2,950. It's spiked below that. And, I took a couple profits here and there. I always like to take profits when I hit target 1, target 2, and then if target 3 and target 4 hit, hey, I made that extra bonus, right? So it's managing risk on the downside with stop losses, but it's also, locking in profits along the way too, because, I do this full time. So if you're going to lock in profits, that pays the bills, So anyways, I hate to be the bearer of bad news, but
oh no, tell us your opinion, please.
Many things have been lining up, and the bearish divergence on the weekly and the monthly of RSI price is finally starting to catch up with it, unfortunately. So it is what it is. So right now I took a long entry on ETH, and I'm up 20% since 2 days ago. Nothing big because I just think it's a bounce, right? So I'm not leaning as heavy on bounces. I'm leaning heavier on the shorts once you get a bounce. I do the opposite in a bull run. In a bull run, I'm going heavy on coming out of the correction. Like, for example, I took a 32,300 leverage long coming out of the July 24th first correction, right? So I go heavy in a bull run coming out of a correction, but I go heavier on a short, on a bounce in a bear market. So that's just the play that I do.
Let me.
Shorting is very risky, so I don't want to make it sound easy. I wouldn't short if you're not ready. I definitely wouldn't use leverage unless you're an expert. So, but yeah, go ahead.
No, I was going to ask when you're doing that. I'm just curious because every trader has their own sort of methodology and their own. Some people are very conservative and they'll trade whether it's a Fibonacci retracement back to a 386 or a golden pocket or vice versa, and other people are only trading. Maybe they'll have their target 3 or something or target 4, because that typically is a fairly large retracement. If you're going on, if you're on a medium term time frame, that could be a good percentage away. So are you trading that where you're setting your sort of previous supports or resistances as targets for your 1 and 2, and then maybe a dream one at the 618 or golden pocket, or are you just trying to playing it based on what the market direction and volatility is giving you in that time frame you're trading?
No, it's a great question. So I put the exact details, not for a quick plug here, but for my paid members on my newsletter. But what I back test obsessively my own trades, right? So when I first got into trading, I back tested experts and saw that they're wrong very often. So I obsessively try new things, but I also keep my old tried and true. Now I'm just back testing my own work nonstop all day, every day. And what's hitting the most in crypto and options trading, I do both, but I probably do 95% crypto just because options expire. And so they can manipulate the charts just long enough for your option to expire worthless. So I just take little trades there still. But that's what I started with. But getting back to your question on crypto, the golden pocket is hitting a lot. So if whether it's a short term, like a scalp or a very short term swing, you go from the last swing low or swing high, whatever direction you're going, and the golden pocket's going to hit, very often. The anchored VWAP, if you're going for a little bit longer swing, you can also go with the golden pocket, but from like a longer standpoint. But I like to stack multiple on top of each other. So when I get 2 or 3 of those in the exact same area, like my ETH short, when I went from 43.86, it was a lower high being put in. More people were so bullish on ETH at that point, it was breaking out of a trend line. So it was a head fake. And so I put out there December 6th, is this a head fake or is it an actual breakout? RSI was trending lower. So it's multiple factors. But the 2950 area was the golden pocket retracement, anchored VWAP, and I think it was my bearish divergence line that I came up with myself. So it's multiple things. So I like to stack 2 or 3 reasons why. And usually when you see a target box of mine, there's 2 or 3 reasons. So if the more you stack, the higher the probability is going to be that you're going to hit your target.
No, I really, really like that. That kind of similar to my trading strategy. But same thing with indicators. I feel like on the one hand, and I'm not sure if I'm just way overthinking this or not, or if maybe I'm not thinking deep enough into it. But one of my sort of theories is, especially even with like the on-chain metrics and stuff, and now with crypto, I don't feel like, maybe I was just completely out of the know before with stocks and stuff, but I feel like with crypto, there's a whole new mind of people coming in that are hungry for all the data that's available everywhere. And so it seems like there's and this, I spoke about this on one of the last spaces as well, where especially specifically patterns typically do break out. Well, they will finalize their direction in the directions that those patterns suggest that they should, based on historic probabilities and stuff. However, especially with crypto, I feel like they always tend to break the opposite direction first and feel like they're going against you, and then they will resolve back to the direction that they were planning. And so I feel like there's a bit of Also because I would say the market's quite immature and it's a lot easier to move around. So they can get people, flush them out on the downside, and then take it back up, flush it out, go back down, and then resolve to the upside. But similarly with indicators, I think it's super important. You don't just trade on the RSI or just trade when the MACD crosses bullish or bearish. It's like you've got to have multiple confirmations in every direction you're going. And I like your trading strategy in that. For people that don't know what he's talking about or what I'm talking about when we're speaking of the golden pocket or the 618, or this is in relevance to something that's known as Fibonacci sequences and Fibonacci retracements and extensions. You can just Google that. There's plenty of trading info out there. But using support and resistances that you're identifying yourself, whether it be within a pattern or even just past price action support and resistances, in combination with then also looking at wherever the 386 or the 618 or golden pockets are, or 782 or whatever it is, breaking up your trading strategy amongst, within those kind of gives you a higher probability of hitting some of your targets. And then also, of course, not putting your orders directly on the exact dollar amount, because you kind of have to either front run it or post run it just a little bit. Otherwise, everybody else is seeing that same number as the target number. So it's pretty interesting. I feel like it's a living video game sometimes. I have to remember, all right, you're playing with your money right now. You gotta do this conservatively, man.
Exactly.
And I agree. And equally, you have to know where you're wrong. So what I'm seeing is, a lot of macro people out there with on-chain or their long-term views of an asset or whatever, and they'll keep moving the goalposts or they'll keep extending the time out to try to fit what they believe, right? And it's typical, it's normal, it's your own. So I always go back to, like, you have to be able to master your emotions. That's part of it. You always hear about that. The one part you don't hear a lot about is you have to master your ego. So if your ego is telling you that something is going this way and you believe all this because of XYZ, and it doesn't, are you changing your thesis to try to keep, or are you changing around your screen or your chart to fit your thesis, right? Or do you already know where you're wrong and you just admit it? And to me, that's part of the ego part that you also have to manage. It's a work in progress. Emotions are a constant thing that you have to, are you chasing momentum? Are you jumping in? Or are you getting out of a position because you're fearful? These are all things that play a part. You could have your perfect chart set up and still not be profitable because of emotions and ego. So those are things that not on the screen that play probably a bigger part of your actual profits, right? So just want to throw that out there too, because it's not just about the charts. Anyone can learn charts, I think. Seeing the next move is more difficult, but controlling emotions and your ego is probably the hardest thing to master, in my opinion.
Yeah, it's like as important of knowing when to pull the trigger. Pulling the trigger on a trade doesn't just mean putting in a buy order or putting in a short. It also means, okay, this is not going in the direction that you're planned, that you were intending. And sometimes you can hold out for a little bit, but the truth is, you've got to, like you said, you make your plan like you're a general on a battlefield. And when it's not going in your order, do you just make all of your troops just completely get decimated because your ego says, you're not aware that the tide's turning against your favor, and then if you do that enough times, then you don't have any troops left to battle. So you got to know when to get out. Just as no whether that means taking profits along the way or exiting at a top, unless you want to wait for 4 years until it gets back to even where your buy point was. But
yeah, if you're an investor, a long-term investor, you're going to have a different strategy than trading or scalping or swing trading. So every strategy is completely different, and that's investing for sure. That if you're just like, hey, Bitcoin is the greatest thing ever, and I love Bitcoin. I'm just going to hold it forever. I'm never going to sell it. I'm never going to spend it or anything. That's a completely different strategy.
oh yeah,
And I think over 10, 20 years, I don't think you're going to go wrong with that. That's my belief. Me, I trade for a living now. I gave up my 16-year career of real estate and mortgages over a year ago to do this full time because I finally figured out how to be profitable. My charts were always lined up, but I would have big gains and then I'd have big losses. So it was 2 steps forward, 1 step back. And then in the last year, if you treat it more like I treated my other businesses, then it's a completely different mindset than trying to take big swings and swing for the fence and, play that emotional roller coaster. So it's more about business now for me.
Yeah, I'll actually bring up one of my somebody that I know is here in chat, and I'll bring him up to speak here in a little while. He's a definitely more he's a long-term investor minded person. So I'm sure even hearing some of this trading stuff is hard, but at the same time, it's like that's where it's kind of like food. Everybody likes different foods, and everybody has a different reason why they like it, and everybody has different strategies of trading. Some people got in 2012, 2013. And I don't think there's much interest in those people to trade much. And this is where I'm aware with myself as well that greed is the worst thing that you can have in yourself when you're trading, because that basically boils right into what you're saying, Jesse, about not knowing when to get in and get out because there's emotions involved. And I know part of the reasons why I trade, one, I find it enjoyable. Once I've gotten profitable, it's enjoyable. It took a long time to get in that position, but a part of the reason I want to trade is there's a little bit of a ambitious, a small amount of ambitious greed in me trying to quote unquote play catch up, if you will, which is a stupid thing to think. So I had to sort of reposition my mind around it and create. And this leads to a good sort of conversation here about portfolio management. Like Jesse, I'm guessing you don't. At least, I mean, I guess I hope you don't. But if you do, it's up to you. But I'm guessing you don't trade with every single dollar in your portfolio on your trades, right? You have a certain amount that you allocate for trading, and then you have almost like a crypto investments account where you take your profits and put into that, and then you also live on other parts of that profit. Or how are you setting up your portfolio?
Yeah, for sure. I mean, if I'm going to be taking an Ethereum trade short, I'm not putting every dollar into that, because if it goes wrong, that's a big portion that's gone, right?
Yeah.
So, like Jordan Lindsay on CTM always talks about on his live streams. He's got a lot of wisdom, and I'm on there every morning. And it's kind of like like professional golfers got swing coaches, right? For me, he's like my swing coach. I like to get on every morning, listen to what he has to say. He's got a lot of wisdom. Been in the markets 20 years, and he would say, all the time, multiple strategies deployed, right? So for me, that's what I have. I have multiple strategies deployed, and so one big short, I'm not putting all my eggs in that one basket. But even if I did, I'd still be protected because I'd have a stop loss in, so I wouldn't lose every dollar.
Right. Yeah, I think some people get disillusioned is the wrong word because we do it to ourselves. But I guess in a small way, disillusioned by watching somebody like CryptoFace trade, who's he's obviously an incredible trader. He's made himself a good deal of money with trading. But I don't think what a lot of people realize is when they see him having a $7 million trade open, which one is leveraged, so he's only got anywhere from $300,000 to $700,000 on the table when he's having seven
Only.
Yeah, well, I mean, comparatively to what he has, but when people see that, they're seeing him in their minds. They're saying this must be him trading his entire portfolio. When in reality, he's only using anywhere from, I don't know what his percentage is, but I'm guessing it's less than 10% of his crypto holdings. He only like right now. I was watching a stream of his the other day, and people were asking why he's not trading with bigger money. And this is like a good lesson from an experienced trader to inexperienced trader. When the market's super choppy and there's not I mean, right now in a midterm, we're in a bear market, sure. But in a macro, we're in a bull market. But we're in a choppy, because we're in a midterm bear market within a macro bull market, and especially with how the money and the price action has been playing out in the last I mean, really since May, ever since we lost the momentum we had coming in from the May 2019 into whenever the dump was on, I think it was 2021. When we lost that momentum, we basically it's weird to say this, but we basically been in a ranging market from 30 to 60K, 30 to 70K, really more in the 40 to 60K range for the last year. So how do you really trade a choppy market that doesn't have a clear direction? Well, one, you're not taking the big, large swings as you would when you're having a very clearly defined trend that, when you're having a small correction, you have very clear targets for what your retrace is going to be. And the other side of that is I remember him saying he's only holding $1 million in his trading account right now, so he doesn't do bigger trades. And he's just like me. Not that I have $1 million in my trading account, but that if any dollar that's in my trading account, I will find a way to talk myself into trading with it. So I've been very tried to be very vigilant about keeping only what's playable, that's actually legitimately safely playable, in terms of if I lost every dollar of this, it would hurt my feelings, but would it put me in a bad position? So you have to really manage yourself emotionally as much as you manage your trades. But I'm going to bring.
I agree,
Dude. And first, I want to say again, thank you everybody. We've had a lot of people pour in here. Thank you guys for joining this show. We'll be going here for quite a while. My name's Kellam. This is Crypto Answered. Got my brother CryptoVet here co-hosting with me. Got a wonderful technical analyst on chatting with us, Jesse Olson. Definitely go and click on their Twitter images. Go follow them. They've got great content. I got a couple other people that'll be coming up, and we'll just be having some open discussion. And we'll bring some of you all up here to ask some questions, and we'll rap about anything that comes to mind. And it doesn't necessarily have to be only Bitcoin. We could talk Ethereum, some mid cap, some smaller cap picks. Some of these guys may have their eyes on. But that being said, I'm going to bring up. This is a kind of a more up and comer technical analyst I've been following for a while. His name's Blockwise. I'm going to bring him up right now, and he can just jump in whenever his thing connects here. And again, thank you everybody for joining and listening. And Blockwise, what's up, my brother? Just make sure you unmute yourself.
Okay, can you hear me?
Yeah.
Okay, good night, everyone.
Oh, and thank you for joining. I know we've been trying to get you on the last couple of weeks, and I know you're somewhere over in Europe, so I know the time was not convenient.
Yes, and also Christmas have been pretty busy with some with friends and family. So, but now I'm free to join to every Twitter space.
Well, tell us what you're seeing on the charts. What's piquing your interest? What are some of the things that you're keeping your eye on?
Right now, well, I only focus on on-chain analysis, like TA. That I know Jesse Olson is really good. Like I don't know anything about it, so I cannot give my opinion on regarding that.
Tell us what you're seeing with the on-chain stuff.
With the on-chain stuff, right now I'm focusing on several long-term metrics that focus basically on long-term behavior, and also, well, some of them we can see maybe the reserve risk. That is a metric that give us the risk-reward ratio from the long-term perspective. Usually when this metric trends up, it usually implies low confidence in long-term holders and a high price. And when this metric usually trends to go down and go to the bottom, usually long-term holders tend to buy and it implies high confidence and a low price. Right now, the metric is entering this area of high confidence and low price from the long-term holders perspective, and we can see like the same behavior in other several metrics.
Oh, sorry,
Okay.
I didn't realize that.
Okay. Sorry.
I can continue with some more examples if you want.
Yeah, of course.
Basically, we can see the same in everyone. Also, the pool multiple is also really relevant for me because it expresses the miner selling or holding the coins. At the end, miners are a group of holders that are really relevant because they hold a good quantity of Bitcoin. And right now, we are trending lower to an area where they are holding more than spending, and we didn't reach the blow of top that is usually a value over 4. So in that perspective, I can expect maybe a trend reversal in some months. And another really interesting metric that David Puel posted on Twitter was the entity adjusted dormancy flow.
Oh, I love that. When I saw that, I was like,
yes,
it was like God's gift to on-chain metrics. I was like, this is money.
Yes, it's a really interesting metric because it analyzes also long-term holders' behavior. That at the end they are the smart money in the market. They have been here for a longer time, so they have bigger knowledge. And if you apply the 200-day SMA that I posted on Twitter, you can see when the metric usually trends up, we can expect long-term holders spending coins on that money, and they realize profits. And when the long-term holders and when the metric trends down, usually long-term holders' conviction to hold Bitcoin is high, and they hold and accumulate during these periods. Right now, we were heading down since the crash in May, and in the last maybe month or a few weeks, we are experiencing a trend reversal in the metric that usually implied midterm growth in Bitcoin price.
Yeah, so everybody, the chart he's talking about, you can go to directly to his Twitter, and you can scroll down a bit, or you can also go directly to my Twitter. I just retweeted both charts that he's talking about. This is a Bitcoin entity adjusted dormancy flow. He has one with the 200-day moving average, and then also just the metric in general. Without the 200-day moving average, it's you can see a little bit more of the price chop.
Yes. Only this to add, and to understand the metric, it measures days destroyed. So when the metric trends up, usually older coins are being spent, usually from older hands, long-term holders. And when the metric trends down, the average price of coins spent on chain that day usually is lower because long-term holders are spending less and holding more, while panic sellers or short-term holders that bought the top are starting to buy and to panic sell. So
almost crossing this or looking at this in confluence with like something like the Puel multiple, which is showing the miners spending coins, outflow miners. It gives for anybody that's unfamiliar with on-chain metrics, the reason why these are so phenomenal when when you're using these in confluence with even TA, technical analysis, it gives you rather than looking at TA, which is obviously it's lagging, because you're looking at metrics that have already happened. With on-chain data, of course, that's stuff that's already happened, but it's giving you a very good, almost like it's, for me, I see on-chain data, when you look at it correctly, as a very incredible, almost like forecasting metric about the changing psychology and how Bitcoin is, like what type of Bitcoin being spent, whether it's from a new holder, an old holder, a smart money person, a dumb money person. And so it gives you a really good idea. It gives you a really good forecast of when there's big shift trend changes, shifts and trends happening underlying within the market before it actually plays out into price action. So I think it's super important for anybody that hasn't yet. Even if you go on Twitter and just follow Glassnode alerts, or follow somebody like Blockwise here, Jesse Olson for great TA. I post a lot of stuff on there. Plan C, who may pop in here in a little while. There's so many different metrics that you can find, and it's literally at the tip of your fingertips. All you have to do is type in what you're looking for, or how to find what you're looking for in Google or on Twitter, and you'll be gifted with so much knowledge that sometimes it can be a little daunting to figure it all out. But once you start looking at it, and even if you don't know what a specific chart means, the first thing you should do is see how the data on the chart is relevant and correlates to various price action over periods of time, and whether it happens regularly every single time, or what the regularity of that sort of correlation is. And same thing with when you're looking at technical analysis. At the end of the day, Jesse mentioned this a few minutes ago. He can speak more about this in a second. It sounds like he runs this in a very scientific way, which more of us should, which is, even within his own trading style, he takes the time to go back and back test, meaning he goes into, he sees where his entries were, what patterns were going on at that period, and what happened with the trade. Did it go the direction he intended it to, or not? And before you get to that point with your own trades, you can do that now just by starting to draw patterns on your chart. Try to figure out where your bull pivots are. Try to figure out where, understand what the different chart functions and components mean. You can do something as easy as just looking at a chart without even drawing a pattern on it, and see on a monthly candle or on a weekly candle that you have a massive shooting star candle or a doji candle, or something that's giving you an indication that there's a shift in momentum about the direction of that current trend you're in. And then you can scale out from that and start looking, okay, what pattern am I in? Okay, now then you can go on Google, or you can find any number of trading sites all over the YouTube or online, and figure out what these different trading patterns mean. And when you start to add these different tools to your tool belt, from trading technical analysis, patterns, candlestick formations, and then you add the cream of the crop, these on-chain metrics, you can start seeing how things are playing out in real time, and then using the on-chain metrics to see what the likely shift in wind is going to be, based on what's happening with all the really phenomenal.
Yes, and something to add on-chain metrics, like I started with Glassnode Academy, that is free on their website. They give you like fundamentals on everything, like on every metric and in a lot of things. Like I started to do it mid-November. I spent like some weekends working on it, and by early December, I had more or less general knowledge about the on-chain metrics, and gave me another view and perspective of the market. Because I entered also like in 2021 in crypto, like in March. So like I've been riding all the dumps. So I needed to get like another perspective from the market. Like you cannot navigate a market without following indicators in TA or rather on chain. Like you need one of both or both. You know.
Oh, absolutely. I'm curious with CryptoVet. Do you, because Vet's been in the game about as long as I have. I've been trading since 2016, and I know Vet's been in it as long, or maybe a little bit longer. And you transitioned from being a professional veterinarian to veterinary surgeon to making a living over the last many years trading. But I'm curious in terms of your trading style. Are you primarily TA, or have you dove into trying to use on-chain metrics as well, or what's your sort of edge?
I actually do both, and other things as well. Like I said, I came from a veterinary background, and I was originally a surgeon. And I did that for 3 years. And when I was moving into crypto full time, I had stocks and a little bit of forex trading under my belt at that time, but never really did it full time. So when it came to crypto, the volatility is so vast that you can make a lot really quick with low leverage and tactics. So just like Jesse was saying, if you want to do swing trading, or if you want to do leverage scalping, whatever your strategy is, you adjust it according to not only your capital but your risk level and your knowledge base. So I'm a huge fan of doing on-chain analysis for because this is how we can study the blockchain itself versus TA is studying the psychology of us as traders. And then, whatever theories of trading you start studying, whether you go from Elliott wave to Wyckoff to, you name it, each one is showing a different interpretation of how the markets can be looked at and how the TA can be explained. So, but in the end, it's still patterns. And I didn't mention earlier, but while Jesse was talking about the bearish divergence since May, I was showing it on my computer. That way I can add it into the video. And I put a little definition of bearish divergence and showing the RSI versus price action. But yeah, so I'm a huge fan of using all of it. And I started trading a little bit, mostly with XRP, just because it was the most liquid on a lot of exchanges back in the day. And then moving forward, was able to make enough money to cover what I made a month as a veterinarian. And once that happened, I did it for 2 months to make sure it was consistent, and then I quit my job. And I was already just contract anyway, so I just worked whatever hours I wanted.
Oh, right on, man. So I'm curious. So Blockwise shared some of his favorite on-chain metrics. Being that you, Jesse, you're more of a TA guy. I'm curious if you only had, I was going to say 3, but let's say 4. If you only had 4 indicators to use on TradingView or whatever charting application you use, what would be the 4 absolutely? If you could only use those 4, what are the 4 indicators that you're like, these are the 4 that are my bread and butter?
Start with the trend line. If you master a trend line, you know which way it's going to go. I posted a chart just yesterday from Investopedia, a trend line break, right? If you would have just drawn a trend line for, say, Ethereum or Bitcoin from the mid-cycle low or from the last correction out, and you start getting daily closes below it, then it's a break of the trend. That's number one. Should always start there, in my opinion. You can keep it simple and you don't have to overthink it. RSI is a leading indicator that I've been able to use it as a leading indicator as far as like bearish and bullish divergence. And the way I've come up with it I joke around because I put the pink dotted line out. I had never read that in a book. I came up with that myself. So to spotting a trend reversal ahead of time before it breaks down from a trend line, I would use RSI personally myself as a leading indicator. And then for actual trades, I'm going to be using Fibonacci and the anchored VWAP. So those are my 4. 2 are for more of a trend, and then 2 are for actual targets, right? So.
Oh, that's pretty solid. What are your go-tos, Vet?
My go-tos as far as actual indicators, RSI, I think, like Jesse said, is probably one of the best. And it's always free. You don't have to pay a dime for it, but it just measures momentum. And eventually, you go too far one direction, you're going to get pulled back towards the middle. So RSI by far. And then next, I would have to say volume in some way, shape, or form. Whether VWAP, whether you're talking VPVR on the right hand side, just general volume, whatever you're talking about, you need to know volume in some way, shape, or form to see if your price action is actually backed up by people agreeing with it and buying it or selling it at that price. And then as far as any other indicators, I mean, just some Fibonacci in some way, shape, or form. If you got that, you can retrace, you can scalp, you can do everything. You don't have to have Market Cipher. You don't have to have Lux Algo. If you do, there are copies on TradingView that are very, very easy to access. But in the end, you can have all the greatest tools in the world, but like they said earlier, if you don't master your emotion and your ego, it's really tough. And like I said, I used to do the 2-step forward, 1-step back. It's like part of the trader analyst upbringing evolution. And from the 2 steps forward, 1 step back, you think you're getting closer, but you're still a good 6-7 steps away from actually mastering your own emotion and ego for trading.
No, absolutely. And I would very, very much agree. I don't think there's a trader out there that wouldn't agree with RSI being one of the critical components of, basically looking into the chart. And, at the end of the day, when people are looking at a chart, if you're at all confused about it or still trying to figure it out, at the end of the day, all you're really trying to do, as much as you think you're trying to predict price action, that's not at all what you're trying to do at all to be an effective trader. the number one thing you're doing when you're trying to be an effective trader, and this is why it kind of sounds bizarre when you hear traders say this, you don't look at the price number is actually kind of irrelevant because that's always going to be in relation to where the market is. So at the end of the day, we're looking for what percentage gains we can get up or down. So it doesn't matter necessarily if it's this price or that price. You now when you're following trends, whether it's breaking support or resistance, sure you're going to tell that it broke above that based on if it went above this price or that or below the price. But at the end of the day, you're looking at the trend lines, RSI. I really like either using like the Wolf ID or something to identify a little bit of money flow, volume for sure. In Fibonacci, yeah, absolutely. Fibonacci.
One thing about RSI diversion. Sorry, I just want to interject one thing. It can remain diverged for days, weeks, or months if you're using the daily chart. I don't use them on the lower time frames because there's too many false signals. But also, if it takes days, weeks, or months to play out on the RSI daily, imagine how long it could take to play out on the weekly or the monthly chart. So I just want to say that.
No, absolutely, and that's one of the other things that's important too. Like if there's a macro uptrend, you could be setting up incredibly bullishly, and it could still be within trend and still have corrections of 15 or 20% or even more along the way. But if you're somebody that's more of a swing trader or a day trader, you might be on the daily chart or the 3-day chart, and you see a bearish RSI divergence that's giving you an indication of where a smaller midterm correction is. So that's a great point you just made there, Jesse, because it's a good thing no matter what time frame you're on, unless you're a long-term holder. You don't need to look at multiple time frame RSI divergences. But if you're holding a good portion of your portfolio and you're swing trading another portion, you could be in a trade for a month or two, but also watching the 8 hour, 12 hour, 1 day, 2 day, 3 days, so anything in there to give yourself an edge sometimes. Because if you're starting to see a large bearish divergence in an uptrend on like the 12 hour, and then you see it spill over until the 1 day or the 2 day, then likelihood that your drop is coming is very high. So now you don't, if you're trading on a 3-week trade, or sorry, a 3-week or 3-month trade, you don't need to start trying to figure out where your bearish RSI divergences are down on the 3-minute and 5-minute, because you don't have enough time in the day to look at it that way. Now, if you're trading within the day, intraday trading, where you're in and out of trades during the day, sure, be on the 5-minute, 15-minute, any of those sorts of moves. But I honestly, just from my own experience, and I'm sure Jesse and Vet, hopefully they're as degenerate as I am, at least at some portion of their learning.
Probably more.
Well, but like early on, man, I was like, I was just trying to trade as much as possible, and I started realizing, one, I'm giving myself more risk exposure. Every trade you're in is exposure to risk. So you want to figure out what the sweet spot is in your trading style to where you can trade as effectively as possible, where it's a combination of as in often as possible, but often enough to make, solid profit. So if that means you're in and out of 2 or 3 trades a week, or sometimes 2 or 3 trades a week in a trend, and then you're kind of out while it's choppy for a month or two. But identifying what your strengths are and trade in those environments. If it's not an environment that you're very good at trading, do some paper trading in those environments for a couple different seasons where you're in those sorts of modes. So you get super solid, accurate, and consistent sort of action where you're not risking your portfolio, and continue to trade in the environments that you're super solid in, but only transition those other trades out onto your trading strategy when you've locked them down and you've identified them. And I'll tell you from my own experience, because you got 2 good trades in, or you locked in a $30,000 leverage long, that doesn't make you a trader. Because wait till you do 20 trades in a row, you might get 15,000, 20,000, 8,000, 5,000, and then if your risk metrics and your risk management isn't set up, then you'll have that one where you lose $80,000 in one trade because you didn't have your stuff. You didn't take your trades seriously with a constructive view of how it's best going to serve you. Every single trade you do has to serve your bottom line.
I did it laughing because are you talking about me in my early years, my early time of trading?
That's me, baby. You too.
A big one 2 step forward, and then a big one 1 step back, right? So
Man.
One step back worth 4 steps is what you mean.
Yep.
Yeah. All right, let's get another person up here. I know CryptoRL. He's been on quite a few of these, and he's actually requested to speak. He always has some great stuff to add, so I'm gonna add him as a speaker. He's another homeboy from he's there. I think he's in Yorkshire, as they would say. But yeah, how you doing, Mr. CryptoRL?
Hi, how's it going, guys? Nice listening to you there. Listening to a couple of things that I found quite interesting there on the on-chain. And one thing I specifically liked what Jesse said is 100% knowing when you're wrong. And in my strategy, what I take into account is, as you'll know, I'm quite intrigued in the Elliott wave analysis. And what I like about that is it actually takes into account people's emotions. And there's a very specific rule set that can't really be changed. So you've got clear indications of when you're wrong and when you're right. So you can set your stop loss and take profit accordingly. And you know, when you're recognizing that, it doesn't actually matter if you're right. You just have to be right at the right time a couple of times, if that makes sense.
As long as your stop losses are in place, yeah.
And with good risk management, you can keep that capital preserved for the next opportunity, which in my opinion comes in a macro bear. But I'm a long-term swing trader plus investor, so I'll use certain percentages of my portfolio to do all them different things with throughout the cycles. So in my situation, I put in quite a large investment in 2020, which was quite a good time. But for a lot of people getting into the market now, it might be a little bit more risky. So everyone has different circumstances. So at the minute, I'm currently sat, instead of quite a lot in crypto, 60% in cash. And a lot of that is actually profit taking. And that's kind of my hedge against anything that can happen. Yeah, that's kind of my hedge against anything that can happen in the market, because once your initial investment's taken, you've got no emotional attachment to it.
Nothing to lose.
Yeah, exactly. And from then on, you're just profit flipping until a macro bear does come around, and you can use that profit that you've taken. So, looking ahead in the market, I think for me, my next big trade, and I'll give you a couple of reasons why, is sushi. I've been posting quite a lot about sushi recently, and number one, it's because there's quite a lot of hidden bull on the macro. I've got an Elliott wave count that has an ABC correction complete to a reverse 0.786 Fibonacci. I've got an RSI reset. The sentiment at the minute is a bit low and boring with sushi. No one's really talking too much about it. And there's also a probability, in my opinion, of a recovery of a high volume liquidity, a vector candle right at the top near $20. So with an initial count of a 5-wave impulse coming from a wave one, that everything there in one is everything saying to me, you know, that's maybe time to enter a trade. But at the same time, I know when I'm wrong, because them lows are going to be broken and I'm willing to cut that short. So I hope that might help a couple of different people that are maybe new into the market. I hope that helps just a little bit.
Yeah, absolutely. And I appreciate you saying that. You know, one of the things, especially for newcomers, is it's very easy. I was even talking to my uncle the other day, and he was so excited to I forget which coin he bought, but he bought it because it was one of the top gainers that he saw on he's on crypto.com, and he saw, oh, this one's moving, so he bought into it. Now, yes, for a long-term investment, that's fine, but when you're trying to identify what to buy, don't go and look at what the top movers are to buy something, you know. And what you just pointed out there, CryptoRL, is a brilliant sort of lens on the true way to make money in this market. If you're not just full on long-term investing, is you want to find the opportunities and coins that are either sitting stagnant for a while or have had a large retrace, and you're starting to see on the metrics, whether it be TA indicators or on-chain metrics, whatever it is, that you're getting your edge from seeing that from your experience as well, that you can identify that there's a shift in wind. It's kind of like sailboat racing. You know, the person that wins a race is the one that can change the direction of their sails and tack on the water to catch the wind just before the next best boat does, and they pick up the most speed. And same way with trading. You want to put yourself in positions as soon as possible when the wind shift, so you can catch the most wind on that trend movement, and you can catch the most percentage gains on that. And that's why, I'm part of. If for anybody that knows the Crypto Jeb show, I do the show planning there, and I do a lot of the TA and basically, writing the morning show. And one of the things that we see all the time is, when the market is in a little bit of a sideways or a somewhat temporarily downtrend, people are like, you guys are bulls, you're perma bulls. No, I mean, every show we identify what the downside is, always. But we also see when it's coming not only near a bottom, but when every single metric we see is showing that there's bullish divergence. So on-chain metrics are screaming there's no supply available. Whales are just bought 43,000 and then another 6,000, another 6,000. The Puel multiple is still strong. Miners aren't selling. When you're having a confluence of every single metric on the market showing that the action within the engine of Bitcoin is showing bullish, it's kind of like an engine revving on a big truck. Well, it takes a second for that truck to actually pick up speed because there's a lot of mass that needs to move. And part of that mass is the general sentiment of the entire niche or industry or the people involved in it. And it takes a little while for people's minds to change. And then sometimes you'll get lucky with a really long short squeeze that gives you an initial pop out. But then what CryptoVet spoke to, which is why it's so incredible, is that volume is so important, because if you do get a short squeeze and you see a giant $2,000 candle and then over the next 2 hours there's no volume, well, it's very likely that candle is going to retrace back down, because that was a short squeeze. That wasn't a change in sentiment that you're getting a bunch of buys that you're going back up. So you always definitely want to watch when you're getting a shift change and you're getting a trend change. I mean, if you're not having volume coming in that's supporting the new direction, then that direction is going to fail, because then people are going to start seeing that this was a premature change, and the bulls that were there will start to very quickly switch their bias from bullish to short. Leverage all of a sudden starts to switch, and the sell orders come in for shorts, and then also the buyers that were there to keep it where it's at evaporate, and then the price naturally falls back down into the range that it was before it broke out. So that's one of the interesting things in this market now, is so much leverage that's in the market. Luckily, it's been coming down a little bit over the last couple of days, but you've got to watch out for these leverage hunts when you get long squeezes and short squeezes, because just because you get a giant candle breaking you out of whatever trend you're in, you've got to watch for volume. But we're gonna bring up we got this gentleman here. I'm not sure how to say his name. Crypto Sain. He's connecting right now. You can hop on whenever you're connected there, Crypto. You can speak now, my good friend. Crypto Sain, speak to us, baby.
Hello, Jess. How is it going?
It's wonderful. How are you?
Fine, very fine. Thank you. Greetings from Istanbul.
Welcome.
Welcome. We really support you and very strong followers of you. We also on the same idea with you, and we also look macro to everything. And we are waiting a good all-time high for Bitcoin for now in 1 or 2 months period time. But here in Turkey, Istanbul, all the people don't like to trade long term. They look everything very short term. So it's quite a big problem here. But what we are trying to do on our channels is just to look everything macro, and that's it.
Well, I like that. You know, I saw a Twitter post today, and it was I don't remember where it was, somewhere in Turkey, but it was an image of uh, foreign exchange. It was a foreign exchange. There's like 2 or 3 foreign exchange storefronts right next to a crypto. It was like a crypto hub where you could go in and buy crypto at ATMs. They're right next to each other, and it was just sort of outlining or exemplifying, you know, some of the battle that's going on with the currencies there. But that's really interesting. That I mean, that's bold of you to, and I agree with you for focusing on the macro. But when you're having an entire consumer base there that is interested in the micro, you know, it's kind of an interesting way that's going to play out. But you know what? The people that are bold enough, that are where everybody else is looking micro, and they bet macro, even if macro to them is only 6 weeks, you know, because every place is different. Then those people that are patient, I think, will win out. And in terms of all time high, I'm actually curious. I'm curious, Jesse and Vet, when do you think we will get back to our previous 69K level, and at least whether or not we break it, at least reach that level again? Jesse, you can go ahead. Go ahead. I know you said that you're
what we are thinking is, according to our technical deep analysis, we are waiting the time 28th of February. Around 28th of February, not maybe the same day, but around that end of February and start of March, we are waiting the all-time high of Bitcoin and then the altcoin rally, really. Before, do you know, the global market before goes, how can I say, you know, there is an inflation pressure in all over the world. And what United States is doing is they left everything second 6 months of the year, but what they are telling now is to do the tapering uh, as soon as possible. And what they're gonna do is um, they will um, they will take a step in March. So before March, we need to have the rally and uh, stop our positions before that. What we are thinking in that way. I don't know if you can understand.
No, I totally understand, and I appreciate you sharing that with us. It's always wonderful to hear different minds and thoughts and analysts from around the world, and you know, coming from different positions. And so I'm really curious, based on what you just said. I'm curious to hear, Jesse, what's your thoughts on that, and if it differs, where are you seeing that's the most likely that we retest our previous 69K region, and then following that we'll get Vet on. And then after that, I'm going to bring up a legend here. He's been requested for. He's a dear friend of mine. I've known him for a long time, and he's a long time holder of Bitcoin. So I'm curious to hear some of his thoughts as well. So Jesse, what's your thoughts on the all-time high?
I'll leave the long-term macro stuff to the experts. I'm just going to stick to the charts myself. And you know, as of now, November 10th, you know, where I'm at in California was the all-time high, and with the bearish divergence on the weekly and the monthly chart I talked about earlier, don't want to go over it again. I feel like it hasn't reset yet. So price is catching up to where RSI is, and on a longer term. So I posted a chart and I pinned it if you're interested. But before we worry about all-time highs, I got to see where, you know, this bottoms out at, right? So in my opinion, it's in a downtrend for 2 months. The longer term, it's been bearish divergence since February. And so, in my opinion, there's going to be lower prices first, regardless of what's going on. The RSI has been diverging for a long time, and now price is starting to catch up. And then if you compare them to other cryptos that already have been in a bear market, there's a lot of similarities. So I have to stick with that. I can't go with what's going on in the world. I just have to look. I stare at charts all day, and that's all I do. And I'm going to stick with that. So that's my opinion.
What's your thoughts, Mr. Vet?
Um, I think we're kind of a little exhausted on the selling. And I think a lot of technical analysis on crypto, and this is just my opinion, is based off of all the previous halvings, right? 2013, 2017. And I think a lot of it isn't taken into account the progression of an asset class and something that goes from just an asset to an actual cryptocurrency or a currency that trades, has different attributes on the larger scale. So I actually disagree with Jesse here. I think anybody who's still shorting, I think, is going to be they're finally agreeing that the price is going to go down. So I think we'll either confirm here and go down, exactly like Jesse says. But if that's the case, then our drop coming back down brings us back to 2010, pretty low. If this is the case, that means nobody's using Bitcoin or crypto in general whatsoever. But use case and people buying it not just for an investment, but actually to use it and do other things with, changes its class from just being something that generates money to being something that people actually use on a daily basis. So I think this is the bottom at 40. And I'll either be an idiot next week like I was a couple years ago, or I'll be reclaimed as a god for guessing correctly. And like I said,
clarify,
guess.
I'm in a long position, so that's my really short term. I've posted the 8-hour chart. I believe it's a bounce. Midterm is that we haven't found bottom, and then long term, I'm ultra bullish on Bitcoin. So I've posted this that short term I'm in a long, midterm is further downside, and long term I'm ultra bullish. So that's my actual position.
Oh, right on.
Cool.
And
Yeah.
I know Jesse, everybody, we're going to continue, but Jesse, I know he's going to be bouncing here in a little bit. But so I just want to extend my great warm thank yous and gratitude for jumping in and sharing your thoughts. Everybody, if you haven't followed him yet, click on his image up there, or go to follow him on Twitter at Jesse Olson, JESSEOLSON. He's got some great content there, and I'm sure we'll be having him back in the future. So have a wonderful night, brother, and we're gonna continue without you if that's okay with you. All right, so we got a lot more to talk about here. I'm actually gonna bring up a good friend of mine here, Legend. He literally is a legend. I doubt there's anybody that's in this space that's held as long as he has. So he might have some. He will have some interesting perspectives here.
He's back. It's been a while.
Yeah. What's up? How you doing, my man?
What's up, man? Thanks for having me on.
Yeah, thanks for coming back. We had you. What was it? Almost over a month ago now. It's good to have you back in here. We'll have the true smart money, sort of here. All of us
money.
trading, and you're over here going, "What the hell, man? Just hold this shit."
Well, I mean, I think what I've learned. Well, I've actually been getting into some new techniques lately that I'd like to talk to you guys about, but yeah, I mean, yeah, I've been getting into yield farming a little bit, and I'd love to talk about it. It doesn't really change my thesis at all. But like it does. What I said does hold. I mean, in order to actually, I think, like have a long-term successful experience with this space, I think you need to have conviction around something. I mean, have your whatever you choose that it is, but you need to have your own kind of base layer understanding and ideation around what's going to last in the long term. If you're a Bitcoin maximalist, then that's Bitcoin. If you're an Ethereum maximalist, that's Ethereum. If you whatever, if you believe in one of the other new L1s, go for it. I mean, I personally, I'm a Bitcoin maximalist, and I don't see any evidence to change that, but at the same time, I understand that there's a lot of money to be made in the interim of, I mean, whether you're fiat mining, like working your job, or you're trading the crypto markets, or you're using yield farming, or even any of the interest bearing accounts that are available for these various properties now in centralized finance. I understand that there are, people are at different points in their journey in this process. And like, really, the main piece of advice that I have is like, just make sure all of whatever you're doing is bolstered by an undying desire to educate yourself about the technology as a whole, and to find something like a property or a movement that you have conviction around, such that you can always rely on that as your foundation, and for your long-term goals.
Oh, absolutely, and that's one of the things I'll say. Even for people that are trading or investing, either or, I can tell you firsthand experience. It's exciting at first to make money on something, but at the end of the day, nothing's going to hold your passion because to do anything well, you really have to dive into the nitty gritty of that project and understand it. And if it's something that you don't care, like if you don't really honestly give a shit about DeFi, then don't focus your energy there. There's plenty of other avenues within the crypto market, whether it's gaming or NFTs or layer one solution, smart, whatever your thing is. Maybe it's just Bitcoin, and it's it's scarcity, and it's first to market, and how wonderful, whatever it is. Dive into it like it's your ultimate passion. So that being said, find things that are passionate or somehow passionate adjacent to what you're already interested in. You'll do yourself a huge favor in how much time you're going to be spending to do this, as well as somebody like Legend here.
Well, thanks, bro. I just, to compound what you were saying, I just think that, well, there's two components to that, and one is that, like, basically you're going to run out of steam otherwise. If you don't have some level of passion and desire for education around whatever you're doing, you eventually will run out of steam, and most likely, because it will become boring, or you won't have the guts to push through hard times or whatnot. And the other thing is that, like, it really, I know there's a lot of money to be made here, but it really comes down, for me, it's come down to time. And it's like, how do I use these properties and these assets to make myself have more time, like give myself a lighter work week, give myself a better experience while I'm trying to look to the future. And so, that's just something to keep in mind, because, you get focused on profit so much that, it can blind you in a lot of ways, and you forget what you're actually trying to do. And that is to, use your most valuable asset, and that's your time.
That couldn't have been said better. I think all of us at some point in our life get blinded by dollar signs or needing this to be accepted in this way, or we need whatever it is. At the end of the day, it all comes back to, can we spend more time with our loved ones? Can we have more money available to attack the passions that we want to build on, whether it's music or painting or contributing to orphanage, whatever it is. And if you don't manage your time in a way to where you are it's almost like a loop. You're investing your time in something that can give you more time. If you're looking at it only in the instance of, I'm investing my time to give myself more money, then you get lost in the making the money, and then you don't allow yourself to spend the time on the thing that you invested it for in the first place. So priorities are something that we forget to talk about a lot of times in crypto, because we're chasing that percentage gain or that next leverage trade or that next $1 million moonbag coin. At the end of the day, we have to very regularly, as often as possible, figure out how to reconstitute and reaffirm what our priorities are in our life, and figure out how we can invest our time and energy into these projects and these crypto projects and investments, so that they can give us more time with it, which was the initial goal in the first place. So why don't you tell us about maybe one or two of the new yield strategies that you're doing to make your money make you money, baby? Talk about time saving right there.
Yeah, man. So, I still consider I am a Bitcoin maximalist, but I got into Ethereum pretty early as well. And so, even with just Bitcoin and Ethereum, and stable coins, there are so many opportunities out there now to position yourself in a way where you can earn pretty sizable interest. And I was hoping that, when I first got into it, that it would be kind of a hands-off thing, like these centralized finance institutions like like Celsius and BlockFi and everything, where you can deposit and you can earn like 4, 5, 6%. But really, the nature of decentralized finance is that it requires a bit of vigilance, like a kind of a daily check-in almost. And you are able to achieve 20, 25%, 30% interest on your assets. And I mean, and that requires, like, you know, it took me like 4 to 6 weeks of like heavy studying to learn like all the pitfalls, and then learn like all the protocols and the chains and everything like that. They're your options, just to figure out what the mechanics were to operate into these pools. But then after that, it becomes like a daily, basically like a tracking. I mean, it's kind of ironic because you guys, there a lot of this earlier discussion around trading has been focused on charting, and like, you know, you look at the chart, you got a trend line. I mean, there's patterns. Obviously, they can dictate with a certain percentage chance at where it's going to go. And when you're looking at yield farms, there's no chart. You actually have to physically go in every day and log the APR, like write it down in a spreadsheet, like what that pool is yielding, such that like if you need to make a move, you have like 2 weeks of record in this pool, so you know what your next best option is if another pool that you're in is declining. So it's almost like just pure data, like raw data, like harvesting. Like, I'm sure you could probably, there's people that do it, you know, they write Python scripts and whatnot so that they can get that data readily. But because it's in combination with the fact that you don't know exactly like what you're actually trying to track, you need to figure that out too on like a regular basis. So it's this really strange kind of like flowing tracking thing that you're doing until you like see an opportunity that outweighs the one that you have now, which is, again, it's similar to trading, but it's completely different in that you are responsible for harvesting all the chart data. It's like, imagine you couldn't go to Google and type in what was the historical price of Bitcoin. So it's because of that, there's a lot of opportunity that's left on the table because people are not really taking the time to investigate and track in that way.
Well, I'm curious, do you, and this is something for anybody that's either currently yield farming or is even considered in doing it. First, number one homework I would put to you before you even consider doing it. If you don't know what the word impermanent loss is, first go and check into that. But that being said, Mr. Legend, how do you? Because I guess this kind of involves a little bit of I don't know if it's partly charting, but how do you? And this is why I guess it's important to focus, isolate, and concentrate, if you will, unless you have a lot of people helping you do it. But how do you track impermanent loss and stuff? Because you know, when a lot of times when you're yield farming, you're putting up your asset into a liquidity pool that is tied to its other pair at, you know, where it's half and half value, you know, of whatever that liquidity you're providing is. How do you track the valuation of the pairing coin to ensure that you're not getting yourself underwater on impermanent loss and losing some of your initial liquidity?
Well, I mean, I'm glad you brought that up. I mean, that's one of the major pitfalls for sure. I mean, besides like, you know, whatever other danger you can get into with like scams and hacks and shit like that. But in terms of like just regular operation of pools, yeah, impermanent loss is a new concept that I had to learn. And just for anybody who doesn't know what it is, the basics of it are, if you have, you know, two different properties that are trading against each other, let's say Bitcoin and Ethereum, and one of them moves directionally against the other, like let's say Bitcoin stays the same price and Ethereum goes up 10%. Basically, that causes an arbitrage opportunity in the pool such that other traders can come in and take value out of the pool. Like, I don't want to get into the details of it, but what it means is like that value that they're taking out of the pool is is part of the money that you had deposited into the pool. So you have to be aware of like the directional moves of assets to some degree. One way to completely eliminate that is to farm with stable coins, right? So if you were farming, let's say DAI against USDC, which are each pegged to the dollar, you know, they're not going to trade like one of them is not going to all of a sudden become $2. You know, they're
Right.
going to stay.
Yep.
Yeah.
Can be a 0.01% fluctuation.
Exactly.
Yeah.
So that you know, unless it completely depegs, which is like catastrophic event, which I don't think is going to happen, but you know, they're not going to change price. So because of that, you don't have to worry about impermanent loss. And it is a serious consideration, especially when you're dealing with like large sums of money. You know, you may deposit, you know, let's say you deposit $100,000, you could lose $1,000 of that. And if you're you know, even if it's a 20% APR pool, I mean that would take you over a month of yield in order to get it back, or around a month or whatever, about a month. So you know, the way I keep track of it, to answer your question, is it's very simple. I like just write down the assets that I deposit, and then I have a formula that calculates how much they would have been worth if I hadn't deposited them. Right. So every day I'm going in to log what is currently in those pools, right? And then I have a little formula that calculates, you know, that value of the pool that I have in the pool versus what it would have been if I hadn't done it. And oh my God, like in terms of like pitfalls, I've deposited into pools where I didn't realize, like, because it was like, you know, learning curve stuff. I've deposited into pools where I've like the impermanent, like the Uniswap pools, it's like super exaggerated, where like I deposit and then all of a sudden it traded like half of my position for the other side of the coin, because it's like I, I don't know how to describe it. Uniswap exaggerates it, basically. That's all you need to know. So like there's that.
Because of the slippage?
It's because you're setting, in Uniswap, you're setting a trading range. Like you're basically earning fees. Like imagine if it's Bitcoin and Ethereum, you could have it set so that you're only earning fees if Bitcoin and Ethereum, like the ratio between them is like, you know, like within a very tight range. So if, excuse me, like just for example, imagine if you set it really tightly, if Bitcoin were to go up like 5%, the entire position that you put in, which was half Bitcoin and half Ethereum, then becomes all Ethereum, right? And so the impermanent loss would be super magnified in that regard. So it, you know, that was the kind of thing where I learned, like, okay, I'm not going to use Uniswap because it's like impossible to trade unless you have like millions and millions of dollars. You know, another pitfall is like, you know, I accidentally shorted Ethereum one time, like with a huge sum of money, because I deposited it into a pool and I didn't understand how the mechanics of the pool went. It's really like, if anybody's interested in getting into it, I would say definitely start with a hardware wallet and go through MetaMask from that point. Don't just instantiate your seed in MetaMask, because that leaves you open to hacking. And also, you know, start with small amounts and get bridge over to like one of the, you know, the other L1s or Polygons, such that you can make a bunch of moves without paying $250, $300 in Ethereum gas every time, and play around with it for a while so you can make mistakes and they don't cost you thousands of dollars.
Yeah, you just pointed out a huge lesson I learned early on, and I'll share this with anybody if they haven't heard it yet. It's that when you're sending, I don't care if it's to your own new wallet address, a new ledger, a friend, a new exchange. I don't care. Anytime you're sending any dollar amount or any crypto amount anywhere, send a very minuscule amount first to clear that you're sending it to the correct address. AVAX is a perfect example. There's different chains that you can send it to. And if you're sending it to the wrong chain, even though it's within AVAX, is lost forever. Or if you have the wrong whatever error, you know, always test the address first, confirm that you have and then you put that same address again, and then you move over the money that you want to do. Because I lost about $2,000 a couple of years ago doing that, and it was just because I mean I don't even know what the issue was, but it's just because oh, here it is, boom, I know what I'm doing. You know, you gotta, you know, that's the one that I don't want to call it a pitfall, but you know, with the ability and the gains that we can make and the access we have to our own financial sovereignty also means that we carry all the responsibilities. So we can't be mad that things aren't done and made completely super easy like they are with banks and this and that. Well, the reason those are easy is because they got thousands of people that are operating all these different softwares and this and that and customer service and fraud prevention and all this kind of stuff. But that's also why you pay fees out the butt to manage all that stuff. So take the responsibility that you have to take on with this as a good badge of pride, because now you're in charge of your money and what's happening with it. But that also means you have the responsibility over it.
Couldn't agree with that more, man. I mean, this whole movement that started with Bitcoin has been about empowering the individual. And frankly, one of the hardest things that we're all fighting against is that people would much rather sacrifice freedom for convenience and the illusion of security, right? I mean, it's like basically the I forgot my password button is that people are willing to sacrifice pretty much their own sovereignty for that. And I mean, luckily now that we have all these systems in place and we have the optionality, we are afforded much more than just sovereignty. Now we have the ability to like make a living. You have the ability to, you know, speculate and you know, become, you know, get wealth and all that stuff that comes along with it. But you know, again, yeah, like I couldn't agree more. Like learn the underpinnings, learn where the common mistakes happen and make those mistakes. Like actually do make them, but make them for $5.
Yeah, make the $5 mistake, not the $50,000 mistake. And that goes for leverage trading too. Anybody who wants to be an idiot like I was and go and trade your entire portfolio early on, do it. It's just going to cost you a hell of a lot of crypto tuition, as I call it. But you can also pay that tuition in $5 increments or paper trading, and you know, learn your craft before you try to make expert moves. Become an expert by going through the motions 1,000 times before you're playing with you know, big boy or big girl money, and then you're not sure what happened. Well, that's what happens when you haven't seen every eventuality, trading with small conservative amounts before you jump into the deep waters.
And also, I mean, learn how to use YouTube. Like seriously, like
Anything
like
you want.
it is, dude. First of all, you can watch content at 2x. That's a huge pro tip right there. That saves you half your time. You can watch content at 2x and learn to tell the difference between basically like speculative fervor and like tutorials, because you can go on, you can learn basic fundamentals and tutorials like mechanics of how to get around. And that's also, you know, you can spend your tuition, as you said, you can spend your time learning that way. And you know, instead of always focusing on what you think the next best property is going to be, actually learn like the ins and outs of how to like function in the ecosystem. That will serve you in the long run, because you'll be able to develop a skill that it's transferable and usable throughout.
Yeah, right on, man. Well, Legend, I appreciate you coming on. I think we're going to make more of a concerted effort not to go 3 hours this time. So before we wrap up, I see we got one more person that had a question. So if you got, I'm going to bring you up here now, Ernesto, and you can ask your final question, and then we'll get a little wrap up here from CryptoVet and Blockwise. If you have anything else you want to say here in a couple minutes, and then Legend. And then we'll wrap this out here about the next 10 minutes or so. Ernesto, how you doing? Thank you so much for joining us. What's your question? Ernesto, could you ask your question, baby?
Don't forget to unmute.
Hey, can you guys hear me?
You got to hit for us. Now we can. How you doing,
good.
man?
Listen, my question would be, I don't know if you guys answer this question or not. I'm sorry, I've been a little on and off hearing you guys. I have a baby, and I just wanted to ask about, do you know if this thing, you know if Bitcoin's tied at all with the moon, with the full moon?
So my answer to that is this. We can draw correlations to anything in the world. And I'm not one to say it is tied to it or not. But you can use people get edges in different ways. So I know some people are trading with the full moon chart, and there has been a little bit of a correlation with that, of course. But I wouldn't bet the farm on it. I wouldn't look at the full moon chart and then, you know, do a huge short or a long position. But I would say, just like any other indicator, whether it's RSI, MACD, volume, even a pattern, I don't make any trade decision or even a purchase for a long-term investment decision without getting a confluence of at least minimum 3. That's if I'm impatient, but usually 4 or 5 indicators giving me confirmation. Yes, I agree. Yes, I agree. Yes, I agree. This direction. Now, if you want to add that as just another little, maybe you see that it's on your chart and it makes you check. Oh, well, actually, let me see what the RSI is doing. Let me see what the MACD is doing. I don't think there's any problem with that. But I would kind of relate that also directly to, is Bitcoin really directly related or correlated to the dollar index chart? A lot of times it is, but sometimes it's not. So I would just say, in confluence with other indicators, I think it might be useful for some people. I don't particularly use it, but I know some people that do. So everybody's got to define their own edge. What are your thoughts on that, Vet?
Yeah. I mean, I'm definitely not. I haven't checked the moon cycle in a while, but I do know that a lot of individuals have found confluence amongst that charts, tons of things, even medicine. So, do I disprove it 100%? Not at all, because there's so much that I still don't understand. Even though I'm a doctor, analyst, some of you guys call me an expert. I don't think I'm any of those things anymore. It's something that you got to practice at all of the time. So I don't think that it's weird at all to use moon cycles or anything. Jokingly enough, I'm a Leo, and I fit a lot of those attributes. I'm kind of a dickhead. So, like, there's obviously something about it that could be right. I think my girlfriend's an asparagus. I don't know what her sign she is, something like that. But yeah, hopefully that helped.
Yeah, but yeah, thank you for that question. We can relate that same thing to whether it's a moon cycle or, I mean, anything. You can say the same thing about any indicator. You could say, is this indicator valid? And my question always is, when you look at it and you back test it, no matter what indicator it is, no matter if other people are using it, look at it yourself, see how it back tests in terms of how its oscillator action or whatever, however that indicator fires on your chart. How does that relate to price action historically over time? How consistent is it? And then how can I use that in combination with other indicators that paint the full picture? Because no indicator will give you a full picture at all. So it's your job to define your own edge, and if that's something you dig, use it. I'm not going to knock anybody for using something that gives them an edge if it's bringing them profitability, but
Right.
it's only going to bring you profitability if you're using it in confluence with other indicators to help confirm or dissuade you from making a trade.
Gotcha. My second question would be, do you know, I mean, if the dollar keeps getting worse as far as, inflation, I mean, is that good for Bitcoin and crypto world, or?
I think in the long run, it's incredible for Bitcoin. And I was having a discussion with somebody this morning about that. I think, unfortunately, in a very short term, I'm talking about like if there's a hit on the dollar or something about inflation numbers or this or that, and Bitcoin still sometimes will fall with the stock market or in inverted relationship to the dollar index. But I think that's only going to be the case for a short time, because there's still a lot of people that are there's a lot of big money in Bitcoin right now, and there's a lot of institutional players that are betting it the same way they would other risk on assets. But I think in the long term, it's not. I mean, it's the best thing that could happen, unfortunately, for Bitcoin, because it's sad to say that in terms of the death of the dollar, but that's also why Bitcoin was created. So
Exactly.
I think,
Exactly.
and Legend would have something more to say about that.
Well, yeah. Before, I guess Oh, he's already a speaker. You want to hop up real quick, Legend, and I'll come
Yeah,
after.
I mean that's that's a great question. I mean, I won't take up too much time, but basically that's the main thesis for Bitcoin, right? So it's not just that the dollar is like it's not just inflation, it's that the underpinnings of the dollar itself are like just not sound. And because of that, Bitcoin is the primary recipient of that benefit. And like Kelly said, you can't really know what's going to happen in the short term. Like there may be volatile swings to the downside with Bitcoin and whatnot, if there's a flight to safety into the dollar. But over time, the Federal Reserve has set itself up in a way where it cannot escape the like trajectory that it's on, and the dollar is effectively rotting. Like this can't be stopped. So
It's on its way out for sure.
yeah. So
And
the result of that is get some percentage. I mean, please get some percentage of your holdings in Bitcoin and keep it.
yeah, for sure. And that said, I'll just keep my take really quick. And just like Legend and Kelly were both saying, when it comes to inflation, Bitcoin fixes the problem. And I think one of the common misconceptions that people have on it is like, well, CPI data came out today, 7% inflation, and Bitcoin only went up a little bit. It's like it fixes inflation later. Right now, of course, it's correlated with the US dollar because that's what's backed against. So right now, you're not going to be able to use your idea and concept that it's a hedge against inflation to day trade. And I think that's where a lot of the disconnect comes from. This is for the future. We're talking at least 1 to 5 years from now, minimum, more like 5 to 10 to 20 as the US dollar goes completely to shit. No matter what the US tries to do, no matter what kind of taper, no matter what, we're playing with imaginary space money. And, people say that about Bitcoin, but it's more real than our US dollar. The US dollar is honestly worth more as paper than it is as what it's worth. So that's it for me on inflation.
You got to keep some. You don't have to, but I recommend that you keep some portion of your mind in a very patient and very slow moving place that is convinced, that's understanding of the macro effects of what are going on, regardless of how you're trying to get extra paper for yourself, your job, trading, whatever. It's really important to have some underlying thesis that lets you move toward a larger, more safer place as you get older in your life.
No, absolutely. And that's like, even if you have a business, if you don't ever clearly define what your value proposition is and what your mission statement is, you're never going to be able to attack it with the correct energy to focus it to where you can build a customer base to build a profitable business. And the same thing with yourself, with your life. Think of yourself as an independent, like an independent sovereign business owner, your life, and if you don't have a mission statement about what it is you're trying to do and how it is you're going to get there, then you're going to get dissuaded by buying Bitcoin and then going, oh, but Solana, and then going, oh, but this, oh, and you're going to be jumping from ship to ship to ship, from rock to rock to rock, always chasing the upside and never quite capturing it. But if you pick your horses and you bet on your horses in terms of your long-term holdings, and then allocate, some smaller percentage of that you're actively trading on or trying to bet on smaller horses, then you'll do yourself a lot better justice than just always trying to pick the next big gain to catch up to somebody. When you see somebody that's, whether they're a crypto YouTuber or a friend that bought in 2014, whatever it is, you're not going to catch up to them, and it's irrelevant. There's no need to catch up to anybody. You are your own person. Your bags are your own bags. Your holdings are your own holdings. You need to focus on your ability to capitalize on the investments that you make. And the way you do that is by focusing on them. But to wrap this all up, I know Blockwise, thank you again for coming on. Legend, thank you for coming on. CryptoVet, thank you as always. Blockwise, do you have anything you want to leave us with? Maybe anything you're seeing on chain going into the next day or two? Or
on chain, the thing is like you need to look at like midterm. Like at the short term, it doesn't give you like many insights. But I'm bullish in the midterm, like in the 6 month, 1 year.
Yeah, absolutely. But thank you again for coming on, and everybody. This has been Crypto Answered. CryptoVet and myself, we did record this. We will be posting a link tomorrow on our Twitters for you guys. You can either listen back or share it with anybody else that might be interested in crypto or has questions about it. And we will be back next week. We did this one on Wednesday. We usually do it on Thursday. My wife's been away for over a month, and I've been traveling down doing crypto stuff down in Florida. She's coming back tomorrow, so I figured I needed to take control of my life, and we had to do this today and give some people in Europe a little bit earlier chance to get on.
Well, yeah, on that note, Kelly, I was going to say tomorrow I'm still going to be doing a Twitter space for Dash League and myself to cover play to earn and all that. I was going to do it earlier, and I can cover a lot of the same concepts if this would be what people would like if you were, say, in Europe, because I know we got CryptoRL and a lot of other individuals who are either in Europe, South Africa, Istanbul, way 8-9 hours ahead of us. I could do it at like noon or 1 tomorrow if that's what people would want.
Right on, man. I might even be able to join if it's that early. But yeah,
For sure.
let's coordinate on that, and I'll help you blast it out. And again, thank you everybody on the chat, everybody that's contributed. Jesse Olson, if you haven't followed him, he's one of the ones speaking earlier. Blockwise here, CryptoVet, a legend who is absolute legend, and everybody else. Thank you again, and I hope you have a wonderful, wonderful night. Stay vigilant. Place your bets. Place your stop loss.